if you look at the Bitcoin treasury space, MicroStrategy is larger than the largest Bitcoin ETF. So there's actually more investors who are preferring to own Bitcoin through MicroStrategy than through Bitcoin. And I think it's for a logical reason, which is that a crypto treasury isn't just giving you a static exposure to Ethereum. What they're doing is they are giving you exposure to someone who is trying to grow your Ethereum holdings per share. And MicroStrategy is a great example. When they went to pivot to their Bitcoin strategy in August 2020, MicroStrategy had roughly a $13 stock price, and it's gone to 400, well, let's say 30x from that point in the last 5 years. During that time, Bitcoin was 11,000, and now it's about 120,000. So it's about an 11x.
Bitcoin has dominated news for years as the leading cryptocurrency that is well known, extremely liquid, and being adopted by more and more institutions. Tom Lee says that supremacy isn't going away. In fact, he says that investors now understand Bitcoin very well. People are aware of its value, how to model it, and how to include it in a portfolio. It's a popular wager now, not a marginal one. Ethereum, meanwhile, continues to be overlooked. In contrast to its promise, Lee thinks it is drastically underowned and frequently misinterpreted. He contends that one of the largest opportunities in the whole cryptocurrency field might be presented by this disparity. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
So for much of the work, and Sean and David, you guys know that from 2017 up until 2025, our focus on crypto has been the idea that, Bitcoin had a very clear place in someone's portfolio because of its not only proven size and stability, but it really is as a way to store value. And then when we thought about how people should allocate crypto outside of that, there were many projects, whether it was Solana, Sui, or the many things that you guys write about. But beginning this year, we started to take another hard look at Ethereum. And the reason for that is that I think that the regulatory picture is moving in a way this year in the United States in a favorable way that is getting Wall Street to take crypto and blockchain pretty seriously. And of course, the killer app or the ChatGPT moment really was stablecoins and Circle's IPO. But following on that was the Genius Act and then the SEC's Project Crypto. And the reason I think this favors Ethereum is many, but foremost, when we look at the projects that are taking place for Wall Street to tokenize assets, whether it's dollars or other assets, the majority of this is taking place on Ethereum. This kind of innovation, blockchain solves a lot of problems and speeds a lot of things. Wall Street moving onto crypto rails, I think, is like a 1971 moment for Ethereum. So I think it's creating enormous opportunities to move a lot of things onto the blockchain. And Ethereum won't be just the only winner, but it's one of the primary winners. And from an institutional adoption perspective, I've heard a lot of people talk about this. Bitcoin's already become very institutional. When I talk to investors and I do meetings, they understand how to sort of understand how to model or even think about future value for Bitcoin. And it is in a lot of people's portfolios. Ethereum is so underowned that it's more like Bitcoin in 2017. I don't think Ethereum is actually viewed as an institutional asset today. So I think it's so early, and that's why I think there's a bigger opportunity. The addressable market for what it takes place on the banking system, and just assume that half of this ends up on the blockchain, then that's really worth $3.8 trillion of captured value on Ethereum. And then if you think about like Swift and Visa, which is about $450 billion a year, and assume, there's a gas fee per transaction, and then what it means to essentially network revenue. You apply, I think, a conservative 30 multiple to that, you get roughly $3 trillion of value. So the idea is that if you add those two pieces together, Ethereum should be close to $60,000 per unit. And again, that's an 18x roughly from here. There's nothing wrong with someone wanting to own an ETF to get exposure, because then they're going to own, without much tracking error, kind of direct exposure to, Ethereum, just like the Bitcoin ETFs give you direct exposure to Bitcoin. But if you look at the Bitcoin treasury space, MicroStrategy is larger than the largest Bitcoin ETF. So there's actually more investors who are preferring to own Bitcoin through MicroStrategy than through Bitcoin. And I think it's for a logical reason, which is that a crypto treasury isn't just giving you a static exposure to Ethereum. What they're doing is they are giving you exposure to someone who is trying to grow your Ethereum holdings per share. And MicroStrategy is a great example. When they went to pivot to their Bitcoin strategy in August 2020, MicroStrategy had roughly a $13 stock price, and it's gone to 400, well, let's say 30x from that point in the last 5 years. During that time, Bitcoin was 11,000, and now it's about 120,000. So it's about an 11x. That means that MicroStrategy has grown its holdings of Bitcoin per share, while like a Bitcoin ETF would have kept you constant. So in that same 5-year period, you'd made 11x owning a Bitcoin ETF, but you did far better because of his treasury strategy. And that treasury strategy is using and taking advantage of the liquidity of his stock and the volatility of his stock so that he can acquire more Bitcoin per share. And that's what Michael Saylor's strategy has successfully done, because he went from having, $1 or $2 of Bitcoin per share to 227 today. So a massive, massive increase.
According to Tom Lee, Ethereum is on the verge of its own 1971 moment, a significant turning point akin to the moment the U.S. currency deviated from the gold standard and fundamentally altered the financial system. As the global financial industry starts to transition to blockchain rails, Ethereum is setting the stage for a comparable change today. Stablecoins and several financial experiments are already powered by Ethereum. Wall Street is adopting tokenization, and regulatory clarity is increasing. According to Lee, this combination creates the conditions for rapid expansion. Ethereum might surpass $6,000 in the upcoming years if his predictions come to pass, making it one of the most alluring asymmetric opportunities available today. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
The majority of the time, someone's coming and looking at crypto treasuries with a really skeptical eye. I think many investors who've owned MicroStrategy have done really well with it, but MicroStrategy is not as widely owned as you think, even though it is one of the largest stocks in the market today. And the reason many people don't understand it is that we already have a very big universe of people that don't believe in crypto. I mean, whether you look at any survey, the Bank of America's latest survey, 75% of institutional investors have zero exposure to crypto. So zero. So that's 3/4 of the universe. And when they look at crypto treasuries, they think that these are inferior to holding the underlying token. And so a lot of the education that we've done in our meetings is to explain that, and I can just cite some numbers from BitMine's presentation. The difference in a crypto treasury versus holding Ethereum is simply the fact that we are growing your Ethereum holdings per share, because on July 8th, when we closed the pivot to the Ethereum treasury, there was only $4 of Ethereum held per share. There's already a really good template, which is MicroStrategy. And so I think any treasury company should study what MicroStrategy did, because Michael Saylor, by the way, he was not the first Bitcoin treasury company. The first one was Overstock, if you guys remember. And, and they had Bitcoin on their balance sheet. But that was did not resonate with investors, and it didn't ever really help the stock. And then Michael Saylor came along and did it in a much, much more deliberate and big way. And so I think that that's really served us. And so what we realized was that in order to really execute a crypto treasury strategy properly, you need to really, as a first principle, just have a super clean strategy. And that's what BitMine's pursued, doing it only with basically common equity. So not doing any derivative structures. And because then it really makes it really easy and clean for investors to understand what the company's pursuing. Down the road, of course, it will appeal to maybe add other strategies that take advantage of either volatility or the market cap size. But I think that the key is really for the company to clearly articulate a strategy that connects with shareholders. That is really important because that is why Palantir has earned the premium it has. It's, of course, a great product, but it's really because shareholders feel like they're owning something important. And so I think foremost is really for investors to understand that Ethereum is one of the biggest macro trades out there for the next 10, 15 years.
According to Tom Lee, MicroStrategy is the best example of the playbook that already exists for how businesses might include cryptocurrency on their balance sheet. Although Overstock was the first firm to retain Bitcoin in its treasury, Michael Saylor came up with the idea in a far more methodical, larger, and cleaner manner, which is why investors reacted favorably. According to Lee, the first rule for a business to successfully implement a crypto treasury strategy is to keep it straightforward and easy to understand. For this reason, BitMines, for instance, does not employ complex derivative structures. Instead, it solely uses common equity. Investors find it easier to comprehend and trust the company's actions when the plan is clear. He added that businesses like Palantir are valued highly not only for their goods but also because their shareholders believe they are a part of something significant. According to Lee, one of the most significant macro trades in the upcoming 10 to 15 years will be Ethereum. A corporation should profit when Ethereum appreciates if it promotes itself as an Ethereum treasury, but the stock price should also represent more than just the Ethereum it owns. According to Lee, investors that solely consider price to net asset value are being overly simplistic. A premium should also be demanded for elements like liquidity, staking income, and a company's velocity, or how rapidly it can add Ethereum per share. Liquidity regulations, for instance, prevent ETFs from completely staking, but a company's treasury may, which means it may generate a higher yield and merit a higher multiple. He believes that because businesses like Metaplanet are obtaining capital and gaining recognition more quickly, they ought to trade at a premium. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.